Hey guys, welcome back. In today's video, we are talking about the AMC upgrade, the big potential, shorts getting liquidated, and many more in this video. Now, starting from this, which is very important, we see from Aaron talking about the Standard & Poor's research update, where AMC has been improved and upgraded to a B- from CCC+ on improved operating performance. So this is obviously a big thing for us. Essentially, it's just a confirmation of how well AMC is doing and what the future projection is. You can see AMC reports the record revenue and EBITDA in the second quarter. This is something we've talked about already, but it reflects continued momentum in the box office. S&P Global Ratings now believes the company has a path to generate sustained positive reported free cash flows. And I think that's the biggest takeaway point, which is essentially talking about how in the future we are going to be seeing AMC grow into a massive institution. And we've already seen how the operation is being done right now. We've already seen how certain costs are being cut, how debts are being paid, and how the revenue and profit is growing. And now we're obviously growing towards that reported free cash flows. And what this will also mean for investors as well, for those people who are worried about potential future dilutions. Remember, when we do reach stages like this, we are going to be seeing how all of the negatives that have been created will then all be repaired. When AMC reaches a stage where it has a healthy cash pile, we are going to be able to see it offer dividends. We are going to be able to see them to start buying back shares, and that will obviously repair the damages it has caused. Now, we've already talked about this in terms of the dilution. Like we've talked about, dilution has negative impacts on AMC. However, I do believe that it has brought on more positive impact because of the money raised that has led AMC away from bankruptcy. Because of the money raised, it has allowed AMC to improve their operations, their infrastructures, to ultimately see them put the results they have put out now. So yes, there are bad impacts, but I do believe that actually the benefit has outweighed the risk by a massive proportion. And kind of going into the future, the stable outlook reflects our view that AMC will sustain improved operating performance over the next 12 months, generating positive reported free cash flow in 2027 and maintain adequate liquidity. And so we now understand kind of what everyone's prediction and projection for AMC is. Now, for the apes who have been here for the longest time, this is something that we already knew was going to happen. This is something that we were expecting for a long time. And now this is something that we're actually seeing it happen. So it's finally come to fruition to what AMC has been doing and how well kind of the investment strategies they've implemented in the past has now reflected on AMC. And so ultimately what this would mean is that essentially everything we've talked about happening for AMC in the past are all starting to becoming true. And what this also means is obviously talking about how the box office is going to continuously growing. And we've already said, even if the box office does not grow, even if it stays the same, AMC is still able to go to improve. Now, that doesn't mean we don't want to see the box office improve, because ultimately that would mean more revenue for us. And that's exactly what we are seeing. We're seeing the release of so many new movies that are coming out that are, consistently beating expectations, that are consistently pulling in hundreds of millions of dollars of revenue. We're seeing AMC benefiting from this. AMC position themselves in a position where everything looks not only stable, but actually projected to be even higher. And so this is what we ultimately talked about with how AMC's strategies in the past before has now put them in the perfect position to allow them to kind of navigate the boom we are seeing in the box office right now. And the big thing is that the last time AMC was upgraded by the S&P was June of 2021. That's also when it ran to all-time highs. So this is obviously a big signal for what's to come, because definitely with an increase in the ratings, we are going to be seeing more institutions being buying. We are going to be seeing more investors having the incentive to buy into AMC. We've already seen how recently institutions have accumulated more than ever. Now, institution accumulation has been something that has been steadily growing throughout the last few quarters, but I definitely do expect now it's going to be seeing an even bigger increase, because they can't turn their eyes away from what is one of the best opportunities right now. When you talk about AMC as of right now in terms of the fundamentals, in terms of the future projected growth and their current price, it does not reflect one another. And this is what we call deep value. And so a lot of institutions are seeing this right now. The apes have already seen this for a long time, but for these institutions, it's now finally, met up with all of the maths, met up with all of the stats, and they all want to buy AMC. And I definitely do believe that this increase in rating is something that's also going to accelerate that. And we ultimately are looking at how the Wall Street sentiment is pivoting away from bankruptcy fears as AMC demonstrates better operating leverage. And this is ultimately what we talked about. And kind of going back to earlier and talking about the dilution again. Essentially, we talked about how dilution has bad impact, but you have to understand the reason why AMC is attracting investors right now, the reason why AMC is doing so well right now is because of those very dilutions. It has put them in the perfect position. And now we're just seeing how positive AMC is going to become and how big of a company AMC is going to go into. And again, with the apes, we are resilient. We'll finish this war. We've seen how AMC has turned around already. We are just going to be looking at more accumulation into AMC, whether it's the retail, whether it's the institutions, and ultimately in the future, the want for AMC to go up will trump all of the shorts that are right now in a very, very deep hole. And that's when we're very likely to be seeing regulations get involved as well. That's when we're going to be seeing the momentum of AMC to go up that as well. Along with this, we saw Cinemark talk about their second quarter earnings. Now, it's also important to look at our competitors because it's important to know, what they're doing, and it's important to know how it reflects on AMC. Now, just like Cinemark, just like AMC, Cinemark also had an all-time high quarterly revenue figure. Now, we were expecting this as well because ultimately the box office has grown well. And I think that this is actually a good thing. We shouldn't be fearful of our competitors doing great results because them doing great results means that the industry we are in right now is doing exceptional. And that would just mean that AMC then has an even more opportunity to beat their previous records, to gain even more revenue. And so the fact that we are seeing Cinemark do this right now, it's actually still very good news. And again, on this channel, I want to keep it as non-biased as possible. And we always talked about how we have to look at AMC as objectively as possible. We have to understand the strengths, but we also have to understand the weaknesses. It's just like why I talked about how dilution does have a bad impact, but it has the benefits along with it as well. And so in saying this, we have to also look at a comparison between AMC and Cinemark, and I'll talk about why this is actually important and why AMC actually stands to gain a lot more from this. So the comparison between AMC and Cinemark is that, firstly, domestic attendance. AMC's domestic attendance is 1.3 times greater than Cinemark's. You can see with the 52 million against the 40 million. Domestic screen count, the 6,900 against the 4,200. So our screen count domestically is 1.6 times greater than Cinemark's. Now, here is where the weakness is at. Our domestic attendance per screen, you can see for AMC is 7,500, but for Cinemark is 9,500. So Cinemark's domestic attendance per screen is 1.3x greater than AMC. So it seems like AMC is still holding on to underperforming theaters. Now, I don't want people to then look at this and think that this is a bad thing. Yes, it's a weakness, but this actually then means that AMC has an even bigger room to grow. We're already seeing how AMC has the majority of the market share. We are seeing how people are going to AMC. And ultimately, as AMC makes their name even bigger, as AMC continuously improve on their infrastructure, more and more people are going to choose AMC in the future. And so what this means is that, firstly, yes, we're lacking in domestic attendance. But if that means that we still have underperforming theaters, it means that AMC is still able then to actually cut their operational cost even more, to actually then in turn increase their profit margin. And so we've already seen how they've done this. We talked about in the past before. AMC was cutting down underperforming theaters, opening up in locations where data suggests it would be good. And that's how we saw a surge in the revenue of AMC. And so to know that there are still underperforming theaters, at least for me, that's actually very good news. That means that on top of the revenue that we're seeing right now, on top of the profit margin that we're seeing right now, AMC is actually able to increase on that as well. But we also have to understand is that with the increase in domestic screen count, and this is something we talked about before, one of the advantages that we do have is that we're then able to actually have spare screens to then stream movies that are kind of gone past the time. And we've seen AMC do this already, where they kind of stream old-time bangers on their screens, and that actually does attract attendance as well. That actually does increase revenue as well. And so all of this to me is just talking about how AMC is still in a far better position, and actually they have an even bigger room to grow than what we were expecting. And so yes, there's weakness, but once again, I do think that when you see everything behind them, when you realize where they can grow to and how big they can grow to still, this is actually very important news. And so AMC is also the next step. On top of what we just talked about with, cutting down underperforming theaters, AMC still has the ability to take the company and the stock to the next level, which is getting into production. Now, we have already seen distribution and production in the past before. Once again, the Taylor Swift movie was done by AMC Distribution, and we saw how well that was done. Now, for me, I'm not an expert in this, so I can't just say that it's easy as just getting into it and then suddenly, you're the next Warner Brothers or you're the next Paramount. Of course, that is not the case, but that definitely is still an industry that definitely is still a big part where AMC is able to contribute, where AMC is able to get a market share. And so we are still seeing, along with the cutting down underperforming theaters, also other various means of opportunities for AMC to really accelerate and grow. And so all of this on top of what we just talked about with how well AMC is doing and the upgrade in their ratings, you can see the volume, the potential, it's all still there. People may think it's starting to run out. People may think that AMC only has this much potential and that, again, it only goes along with the box office going up, but no, AMC still has so much more things that they can do. And then this is what we talked about with the media. So AMC is up 67% since the Motley Fool advised against buying AMC. Yesterday, they urged shareholders not to forgive CEO Adam, nor to give him credit. And so this is what we talked about with how, once again, the mainstream media, these media articles, they're not here to help out the retail investors. They're not here to help out anyone else, ultimately, but themselves. And we can see this because evidently they are wrong about this. And you can see, since AMC has gone up 67%, and since other people bashing on AMC and it's gone up hundreds of percent, you've not seen one of them come out and apologize. You've not seen one of them come out and say, I was wrong. But ultimately, they're going to double down on that. And for me, that is obviously a ridiculous thing to see. But for them, it's because they know that if AMC continues to go up, they are going to go get liquidated. Another thing that I want to talk about, which really relates to this, now it's not a different thing, but I still do think that it's very important. You understand the strategies that they use, which is, for those of you who don't know, recently a company called Situational Awareness had actually been liquidated. And this was a fund that was run by a very young person who has done extremely well, has kind of returned hundreds of percent within months on his fund. But recently they were liquidated and they were bought up by Citadel. Now, the whole story to this is that prior to this, Citadel made a tweet. Citadel were talking about how Fed was actually going to pump the rates. They was actually going to hike the rates. Now, what we saw was that nothing actually happened. Fed's rate remained the same. And then as they talked about this, as we saw the whole market kind of go up in turmoil, we then see them start to buy situational awareness. We saw them buy their whole fund. And this is just another case of how they're not here to help you out. They're not here to help out the retail investors out. They're not here to help out anyone but themselves. Everything they do is for the sole purpose of benefiting themselves. Just like them saying about the Fed hike to cause turmoil in the market, to cause liquidation within this fund, is because they can then buy it for the cheap. And that's ultimately what they did. And it's just a great reflection of what these media articles are truly intended for, as opposed to what they are trying to tell people what they're for. Now, for AMC, on the other hand, we are, of course, doing great. We are still beating these levels. We're still seeing AMC going up. We're still seeing AMC reaching the levels that we are projected to. We're still seeing new movies coming out, old movies doing well. These are all very good things happening for AMC. And so for AMC, we are still looking very, very clear, and we're going to continuously grow as the box office get even bigger. And this is where we talk about how shorts are seeing the bad side of it now. You can see, so John Hampton, who we talked about, is someone who's very vocal about shorting AMC. You can actually see his fund right now has lost 9.2% for the 2026 Australian financial year. This loss marks the hedge fund's second consecutive year of negative returns, following a 7.7% decline in the 2025 financial year. Now, I do find this to be quite interesting because this is someone who talked about how shorting AMC is the freest money that you will ever make, who's very vocal, who's talked about how AMC is going to go bankruptcy. And yet, for someone who says that he has a surefire way of making easy money, their whole fund is losing money as of general. So clearly it doesn't make sense, because if shorting AMC truly is free money, then they should just be using the whole fund to dedicate to that. They should be up 10, 20, 30% or whatever percent they make it out to be if AMC was going to go to bankruptcy. But clearly that's not the case. And once again, you know that for these institutions, whilst they claim to be the smart money, they definitely don't make the decisions that make them look smart. And this is just another case of it. And also on top of this is that ultimately for AMC right now, we are seeing a very, very low put ratio for AMC. And this alone is already just talking about how big AMC is going to get. We talked about the momentum, we talked about the volume. Ultimately, people want to buy AMC. The demand is there. What's not there is the supply of real shares. So we are still seeing synthetic shares being injected in the market, but ultimately we know the more synthetics they inject, the higher AMC will go up in the future. Now, as always, this is financial advice, and I'll catch you guys next time.